All right, folks, crypto market update. Happy Thursday. On the Bitcoin price a little bit in some altcoins, but here's something that I was kind of thinking about, similar to 2015. We went down, didn't really have a wick, but it was certainly a big sell-off. I noticed that was low, and if in the event we came down and tested down here, or even wick down a little bit lower, and have a similar market structure as
Hey,
2015,
Rock, your
I
audio's
believe it
cutting out pretty
could.
bad.
Uh, is it?
Yep. I think if you
Okay.
talk whenever you're not moving your mouse or anything, it's I think that might work a little better. It definitely sounds like your bandwidth is not that great though.
All right. Testing, testing.
Yeah, here, Rock, I'm going to take over screen sharing. All right, guys. Can you guys see that? All right. Rock, are you still there? All right, looks like Rock got kicked off. Okay, anyway, let's go ahead and just dive into this. All right, so taking a look at the charts, I don't think I've made any changes to this since last week. One thing we're looking at is how 3,800 on BTC is basically equilibrium, aka a magnet. What that means is when we get below it, we basically have some demand come in. When we get above it, we have supply. And so you can see if I kind of squeeze out, and I like to go between like the regular candles and the Hikinashi. So if we just look at regular candles, I mean, you can kind of see the same story there. But right now we're definitely squeezing where we have higher lows, lower highs. And so the longer we consolidate, typically the bigger the breakout's going to be once we do break outside of that range. So you can see, actually, can you guys see these alerts? I'm not sure if they come through. That whenever I save a image, they don't come through. But can you guys see these like orange alerts?
Yeah, I can see it.
Okay, cool. So I've just got these set. You can see like a little below that prior high and a little above this prior low. That way, if I'm not paying attention and there's a big move that gets close to one of those areas, then I'll be alerted of that. Odds are, I would say like 80 or 90% of the time, whenever I box price like this, like I don't really end up needing the alerts because I'm watching price whenever it gets close to an area. But I just have those kind of set in case something happens. Rock, what were you saying about comparing this to 2015 and if we get a challenge or a retest of the low?
Yeah, so I was thinking about it, and the market structure. I'd made a slightly higher low.
Mm-hmm.
If we did some more sideways, and then had like a fast capitulation wick either down to retest that double bottom, or maybe even drop a little bit lower with a tail.
Yeah.
If we have an immediate V bottom bounce from there, then it would be a very, very similar market structure as 2015. The main difference being that the initial drop didn't have as much of a wick, but you can kind
Yeah.
of see that like it retested that middle point and went sideways right at that middle point right
Yeah.
there. And then it wicked down and freaked everyone out. And then that was like the springboard out of the accumulation range to break out of that range. So it wouldn't surprise me that when we do make a reversal, that we have like one final shakeout just to spook the markets and crush market sentiment. Maybe it would like tag down to that 2,800 area, but I think it would be very quick. And in my opinion, if we did do that, especially after some more sideways, if we continued chopping around throughout the year, it wouldn't surprise me if that led to the full reversal. So that's kind of what I would be watching for if we did snap down after some more sideways.
Yeah. Do you remember? I want to say there was like a flash crash or something that happened this week.
Yeah, that was a bit glitch Finex.
That's
So
right.
their trading engine glitched out. Basically, it was really weird because you go to hit close an order, and instead of closing the order, it would open the opposite order. So if you're in a margin long and you hit close,
Yeah.
it would margin short you. And then if you hit close on a short, it would margin long you. And it never showed that. So people kept clicking that button frantically, trying to close their positions on the break of, it was the break of 250 when 250 snapped. Probably within the hour, we snapped down to 166. I was
Yeah.
in the trenches when that was happening. So that was a pretty exciting moment.
Yeah. I remember that day. And I just remember everybody complaining and panicking but it like came right back up pretty quickly, if I'm not mistaken. Let me see. What was the daily looking like? Yeah. So it was basically over the span of like maybe a couple hours, and then it wicked back up. And then the next day did the V bottom on not insane. Well, this is Bitfinex. So I don't even know if that volume is correct, but yeah, I agree with you. When there's a low, I do expect like some kind of stop clearing action. So it's either going to be like, if we do get a dump off, if we get like a sustained dump off where it looks like, heavy volumes coming in and it's like, it's like regular trading, then that would be a sign that we're going to go for an extension. But if it's something where it's like, we get a 30 to 50% drop in one day, or like in just a couple of hours, and it's like super, super fast, I'll definitely be there trying to nail the bot or nail the dip buy.
Yeah,
Yeah.
I think it would crown or frame the market too in volume, just like that first dump.
Yeah. So like number one would be like a regular breakdown where it's like, consistent volume, not too fast of a sell off. Right. And then option number two would be like a fast panic of say like 30 to 50% or more, right? With like extreme volume, if I can spell extreme volume. And then, basically my plan there would be to buy the dip. And then number three, if we don't get a regular breakdown or a fast panic, the bull case of that is a breakout above, the 4,200 to 4,400 area, which could also signal a reversal. So the first option here is a bear market. The second option here is potential, I would call this potential capitulation, right? Meaning like that could be the low. You don't know until after the fact, but in those cases, I feel like it's usually worth a dip buy. Or number three, this is the best like bull case for a shift in market structure, right? Those are kind of, to me, the three options. What do you think, Rock? You see anything else?
Yeah, absolutely. I concur with that. It also looks like to me, it looks like a lot of altcoin charts have been just kind of flatlining, which when I see that across the board on many altcoins, to me, it looks like a prolonged accumulation period. So obviously if Bitcoin were to break through that, I think we start to see some larger candles and higher lows and stuff across a lot of altcoins. I mean, right now there's a few alts that have popped off. For the most part, a lot of them have just kind of been chopping sideways, but there's a few that have, Raven Coin and BNB,
Yeah.
Binance have been the big ones. But it's interesting because, one thing I've noticed as far as market sentiment that seems different than 2015 is like when Bitcoin crashed to 166, that actually took the majority of people by surprise in 2015. I
Hmm.
don't think a lot of people were expecting the price to go quite that low. I mean, I think the equivalent of it would be if Bitcoin were to suddenly like break down and go to 1200 or something like that. But the thing is that a lot of people, it seems like a lot of people, including noobs or market sentiment, a lot of people are just kind of, it's almost like they want lower prices.
Yeah, well, there are a lot more rational people this market cycle, and I think we've definitely had something to do with that, with kind of educating people, and especially on YouTube and stuff like that, and people just realize, oh, this is cyclical. And you've got what was it, Jack Dorsey this week saying he's buying. I believe, correct me if I'm wrong, guys, but I think he was saying he was buying $10,000 a day or something. So you do have a lot of people that are in that like accumulation mindset. Oh,
Yeah.
10K a week. Oh, okay. Um, yeah, you've got people that are in that accumulation mindset. Personally, I wouldn't mind if altcoins actually, like, so say this turned into a bear flag, right? So run retracement, so what this chart is, by the way, guys, for anybody that doesn't know, if you type total two in TradingView, it's the crypto market cap excluding Bitcoin. So basically all altcoins. And I don't know exactly how they calculate this index, but I just kind of use it. So if you look at an extension though, if we run, this is the run minus that retracement, if we hold up to the low, there are definitely some targets down here that you can pull up. But even more so, just looking at the market structure, if we retest this prior level, and then say we had accumulation down in that range, for me, that would actually be even better as far as like a technical accumulation pattern. Because right here, we're just kind of in the middle of this range. Yeah, exactly, David. That would kind of finish the cycle.
If it goes lower than that, then, crypto is not doing so well.
Well, and so that's the thing too, right? Is like, I mean, my thesis, and we've been talking about this for a long time, is that most altcoins are going to fail over time. So at some point, I would expect certain cryptos to basically become disjointed from either the Bitcoin chart and or the total market cap non-Bitcoin. Meaning, like, I expect some projects, like we're kind of seeing that with BNB right now, right? So like this one is completely disjointed from Bitcoin. It's got a mind of its own. And this is what we saw like with Ethereum in the early days, right? Like you'll go through periods of time where you have some coins that are correlated with Bitcoin, and you have some, like in the early days, Ethereum was like inversely correlated, and then they'll start like completely doing their own thing, right? So in general, I would expect, and maybe this is the way to look at this total market cap altcoin chart, is because I expect a lot of these coins to go to zero. Maybe this chart doesn't see a new all-time high. Maybe Bitcoin does and several other coins do, but this one, I don't know, because there's just so much bearish pressure for a lot of projects that, in my opinion, are going to fail over the next 1 to 3 years. So I don't know. That's just my kind of take on the broader picture.
Yeah, we'd have to take out some of the top tier projects for it to make a big impact, because like most of the really sketchy shit coins are such low market caps that they have a very negligible effect on that.
That's
Like
true.
Ethereum's carrying most of this right now.
Yeah, yeah.
It's
And I don't know how this is weighted. I haven't really looked into it, but yeah, you're right. Like if it's weighted by market cap, then Ethereum and Ripple and some of the other big ones are probably going to pull this more so than the others.
Yeah, we need to see like a fall of some major projects like an EOS or something like that, or just things sliding and market cap. And those a lot of these shit coins, a lot of them die on a regular basis. It's all like almost, I would say like every year there's like a whole slew of dead coins that just don't go anywhere, just coins that maybe are still alive, but just really aren't doing anything, as far as
Yeah.
development or innovation or anything like that. And it's surprising because you look at something like a clone coin, like Litecoin, for example, just a very simple generic clone coin, and it's still a beast.
Yeah.
It's still
Yeah, it's actually
doing
started to
well.
have some pretty bullish price action.
Yeah, and the volume's still good, and the hashing power is still good, and it's surprising. So it shows not to underestimate a fair launched proof of work altcoin,
Yep.
because right now they're so far and few between. And I think that's actually one of the reasons why Raven Coin's been doing fairly good as well. Uh,
Hmm.
Although Raven doesn't have ASICs, so kind of I think it makes it appealing to a lot of GPU miners.
Yep. Yeah, I mean, if you look at like the daily market structure of a coin like Litecoin, I would say the kind of the medium term market structure has changed, right? So like here you've got run retracement extension, lower highs, lower lows. Here you put in a higher low, right? And then you have for the first time like a actual break of resistance right here. So we're
Yeah,
back into this range. So if we do something like this, or say we put in, like we come up and retest 65, 70 and then chop around for a couple of weeks, that could actually turn out to be like a really big inverse head and shoulders.
yeah,
So like say it does something like this, where you've got your neckline at like 70 and there's your head. And then say, over the next few weeks to a couple months, does something like that. That would actually be really interesting. And then you could do a measured move from the head to the neckline, pop that sucker right up here. And then you could also run extensions, but just looking at that, that would get you closer to that round number of 100, right? Which is also prior resistance, or sorry, prior support turned resistance, right? So this is actually a pretty compelling chart, in my opinion, just from a technical standpoint. Where, if, and again, this is thinking like 3 steps ahead of the game, but if you do get that pullback and that does turn into a right shoulder and breaks the neckline, from a risk to reward standpoint, that looks pretty solid. So, and I'll post this in the room, but you're basically, if in that scenario, you're looking at over a 2-to-1. So I like that actually.
yeah. It could be a nice clean trade setup, and a retest to that prior support resistance market structure wise would be very similar to Bitcoin retesting 6K. It's
Yeah.
interesting because Bitcoin and Litecoin, the charts were almost identical, especially up in the highs when things went parabolic, until Litecoin broke down first, almost like a leading indicator, even though nothing's correlated to it. Even though everything's correlated to Bitcoin, it was like Litecoin was acting as a leading indicator, showing that descending triangle breakdown. And now Litecoin's making higher lows. So if it
Mm-hmm.
actually made a move like that, I wouldn't be surprised to see Bitcoin follow suit.
Yeah. Yeah, exactly. And Harry's asking how to enter on that. So basically you basically have 2 options. You can either buy some or all on a retest of the right shoulder, or you buy some or all on the breakout. If in these types of scenarios, if I'm pretty confident that it's a true reversal, then what I'll usually do is start to scale in on the bounce off of the right shoulder. So like after it starts to bounce off of here, I'll say, okay, well, let me flirt with this. Let me get in 10, 20, 30%, maybe up to 50%. And then I'll add on the break. So the goal with that is, for me, is like trying to get a better entry than above the breakout. Cause sometimes you might miss the breakout too, right? Like say you scale in a little bit and then you're sleeping when the breakout happens. So you don't get a full position, but you have something on the table. And then also on the risk management side, say you buy a partial position here and then it rolls over and flops and you have some stops and, you know, you manage risk, then you take a smaller percentage size loss on a smaller position size, right? So you're risking less on a percentage basis, and you're also risking less of a bankroll because you're not into a full position. So that's kind of how I like to play these right shoulder potentials. So this is one that we can definitely keep on watch.
Yeah.
So one more thing. So I saw some questions about Bitcoin, and then we can kind of move on. So let me scroll up. So Jinda said, how would you play these three options on Bitcoin? So, you know, basically in the case of a regular breakdown, you know, like if the bear case plays out, basically the option that you have is to either, and it depends on what capital bucket we're talking about, right? If it's an accumulation play, I'm not going to accumulate if we start to see a regular breakdown, but you have the ability to either short, so you can say like hedge long positions with a short or get net short, right? So that's like option number one, or leave it alone, wait for a bull case trade setup. Right. Those are really the two options that you can have. And then with capitulation, where am I typing? Oh, there we go. With capitulation, the way that I typically do this is buy dip at market structure support, and then sell. Like I typically sell 50% into the first bounce, adjust stops, and see if the low holds. And then if you get like a much bigger move, right? And then in the bull case of a breakout above 400, 4,400, I buy the breakout, close into first, close part of position. I can't type today. Close part of the position at first sign of weakness because we're in a bear trend, right? And then like see how that plays out. So that's really the three ways that I would play that. Does that make sense, guys? Everybody with me on that? I'll post this in Discord and the chat. What percent bounce? David, I'm not sure which part you're referring to.
Or like how high would it bounce percentage wise? I guess that would be based on the market structure, really. You know, like
Yeah.
Good sell zones are if it retests prior support as resistance, stuff like that.
Yeah. Are we talking about the capitulation, like fast panic dip buy? Yeah. So on that one, like usually it's like the prior breakdown area, or If it's a very, very fast, aggressive bounce, usually just like if it's a bounce of, 20, 30, 40% or more, the first sign of weakness, I'm going to start scaling out. Like I might hit like 5%, 10%, and then at that point is more of an active management strategy. And I would just caution you guys, like, I'm not telling you guys to do these three things. Like in the event of a capitulation, like you really want to make sure that you're confident in your ability to buy dips. Like whenever there's volatility, and we haven't had this in a while, but whenever we get that type of like panic price action where you get those violent bounces, like we do our best to show you guys like how to do that. But if you've never done it before, you're probably better off just watching and like paper trading, or just trading with a little bit of capital, because you can really get run over if you don't know how to position size and like scale into a dip buy. Like the one thing that can happen is you can buy, say, a 30% panic, and then it can go down another 20 or 30%. And if you're doing something stupid with margin, or, if you don't have like really strong reasons and actually know how to plan out a trade, then you can actually become part of that panic where you like buy halfway through and then you end up capitulating yourself at the low. So you have to be careful with those scenarios.
Yeah, absolutely, absolutely. And obviously, not all bounce plays are guaranteed. I mean, just one example of that is, I've pretty much traded almost every bounce play on Bitcoin over the past, several years, right?
Yeah, like the
And
real ones. Yeah.
yeah, and have done so quite successfully. I've made profit off of pretty much everyone, including the initial shakeouts at the beginning of 2018. But in the last big sell-off when we broke 6K, we got a small bounce, but it wasn't that epic for the level of selling off. So that's an
Yeah.
example of like, and because bounce plays are my forte, I got very, very confident and buying a bunch of stuff on that dump, and still kind of waiting for a decent bounce. So it hasn't really, like, it started to V bottom, but it didn't really pick up any momentum. Like it just kind of tapered off. And so for the most part, pretty much like almost every other major Bitcoin dump has had a sharp V bottom, if at least to retest prior support as resistance. But in the case of a slower grind bear market, which we've been in on the later half, the slower grind where you don't get the big volatility and it just slowly sells off. The last break of 6K was pretty, sharp sell-offs for a few weeks, but just didn't have a lot of follow-through momentum on any type of bounce. So now I'm just kind of watching to see if we break out this accumulation range. So that would be an example of, me being quite confident in bounce plays and a bounce play position not really working out as I anticipated it to. That said, I'm okay with that, because I'm okay with being in crypto again, right? I'm okay with holding my crypto, and after the Quadriga thing, not having money on exchanges right now. So that's also a lesson there as far as counterparty risk.
Yeah, and if you're going to be aggressive dip buying, like doing it after an 80 to 85% drop, I would say is much more rational than like buying the first dip off of a parabolic move and then bag holding all the way down, right?
Yeah, exactly. It's kind of goes into that like risk to reward of, in crypto, we have to balance not just risk to reward in our investments or trades, but also in counterparty risk as another element. So yeah, that's some things to consider as far as just because a specific strategy works consistently doesn't necessarily guarantee future results. And also, overconfidence can be a bad thing too, right?
Yeah. Yeah, absolutely. Ray was asking, what do you or would you expect crypto to correlate if stocks weaken or anti-correlate? I think they're kind of an uncorrelated market to stocks. So I haven't, at least in the short history that crypto's been around, been able to really find any kind of correlation other than, like in 2017, stocks were in a bull market and kind of went a little parabolic here at the end of the year and coming into 2018, similar to kind of how Bitcoin did. But I feel like they're kind of unrelated or non-correlated asset. I look at kind of the major, and this is how I have my watch list kind of set up is, I have like my indices, right? Like overall stock market. And I have a bit of a home country bias to U.S. stocks, but I do check on European and Asian markets and even Indian, like the Nifty 50 and stuff like that. And then obviously crypto, I think this is completely its own beast. Oh man, I just moved that alert. Hang on. It's its own kind of uncorrelated asset class. And then you've got metals, right? So I pay a lot of attention to metals. So like gold. I've been buying, I actually started buying gold. I think it was 2014 back here. And then have recently, over the past year, started buying more here in the 1200s. Now, I have no idea if this is going to be the low in gold. But the point here is I think metals are just an uncorrelated asset class. And then you've also got commodities like oil, nat gas, cattle, lumber, copper, all that kind of, well, copper's a metal, but, so, and then you've got Forex, right? You got different currencies. So I pay attention to like the dollar index, the euro, China, the pound. And I don't really trade Forex, but I kind of pay attention to this. But, I think it's just smart to kind of keep an idea and just kind of stay plugged in with what the different markets are doing. And then you've also got bonds. So another tool that I really have liked recently is Koyfin. We've been talking about this. I'll pop this in Discord as well. But if you guys just want to kind of keep your thumb on the pulse of markets, you can see we've got global equity over here. You've got currencies, commodities, right? You can have a look at interest rates, right? So this is kind of just like a good dashboard, and then like top news. And then if you want to drill down to US sectors or different countries. So I don't know. I geek out on stuff like this.
Looking at that S&P chart, in my opinion, just not put fundamentals aside, that looks like the start of a breakdown on a massive ascending wedge that's already produced a lower low.
Yeah, it looks like it could be a real gnarly head and shoulders.
Yeah, I'm still bearish on stocks. I haven't really, like, I bought GE and I bought a bit of Deutsche Bank again. I know I'm digressing, but just based on that market structure, like, I've just seen that shit too many times in crypto that I don't know. I just feel too I don't feel good about buying something that looks like that to me.
Yeah, no, I agree. I'm kind of facing that right now where like every year we basically have options of how we can invest in different types of accounts, be it like a pension plan or 401ks, or we maximize the tax optimized investing strategies. And kind of like our whole thing right now is how do we participate without opening ourselves up to a lot of downside risk. And this is a complete different tangent, but I'll just tell you guys anyway, because some of you guys used to trade futures with us. Something that I've been doing a lot of research and what I'm going to be kind of diversifying into is managed futures accounts. So what that means, and just a very quick tangent, we'll get back to it. So the benefit in trading futures is you can go long and short, obviously, but you can do that on a bunch of different markets. You can do the stock market indices around the world. You can do agriculture. You can do currencies. You can do bonds. You can do all types of stuff, right? And so you can invest in these funds, these private pooled funds, where again, most of them you have to be an accredited investor, or you can participate through a mutual fund, which is a little bit different. But the idea there is managed futures trading accounts do better in times of bear markets and a crisis. So what I'm doing now is, instead of just putting more capital into a long only stock bond portfolio, I've been interviewing several other top performing managed futures companies, and I'm going to make a pretty significant investment in probably at least one, maybe two or three funds. That way, if there is a pullback, like just to give you an example, like some of the funds back in 2008, when everybody was losing 50%, a lot of those funds made north of 40 or 50%. So that's just what I'm looking to do.
That sounds like a good strategy. You're kind of hedging your downside risk from any index funds by doing that. That's a good strategy.
Yeah, because it's one thing to be in like a long only portfolio, but I really, really like to put my money, at least some of it, with a company that hires PhDs and manages at least my minimum threshold is $1 billion fund. I don't like to go with the big guys. Like, there are some managed futures funds that are like over 10 to 20 billion, which really isn't that big, but for the futures market, it kind of limits what you can do. And anyway, I've kind of found a sweet spot there. So I'll do some, I'll show you guys what I'm doing once I make some decisions in the next couple of weeks. But that's just something that I think is pretty smart. And if you ask any like really wise money manager, they'll tell you like, yeah, sophisticated investors look to have like 10 to 15% of their accounts in managed futures portfolios. And instead of me being the worker, instead of me having to go out there and like day trade futures, like I don't want to do that anymore. I'm old. Like I'm old in the trading space. Like once you hit 30, I feel like it's like, okay, you got to do something else. Cause I don't know, man, I got so freaking stressed out and spent so much time doing that. And now I'm like, okay, let me be an LP, right? Let me be a limited investor. I don't want to be the operator for 16 hours a day, because a lot of these managed futures companies, they have traders that are trading up to 50 or 60 different markets 24 hours a day. Like they have a day shift, they have a night shift. Like, why am I going to try to compete with that? Let me just ride that bull, and then have 100% of my time to myself. Like,
exactly. And then they've got like sophisticated algorithms, artificial intelligence, like all kinds of crazy stuff right now.
Yeah. Like one of the funds I've been interviewing recently, they hired a guy that unfortunately he passed away, but he was doing stuff with neural networks, and like it's at a level that I can't even comprehend. I mean, these PhD mathematicians are just out of this world smart.
Yeah, I recently, actually, digressing a bit, I met a guy who he's semi-retired. He worked for Google, and he says they have AI right now that is on level of what you see in sci-fi, and they haven't broken it out to the public yet. Self-learning, and he codes that shit.
Wow.
He says they're gonna let the public know in like 2020 or whatever. So,
yeah, that's crazy.
Yeah, this guy's like on a whole other level, man. I was talking to him yesterday, and it was really tripping me out. He has this thing in his it's self-learning, and he runs it in his home that he programmed himself, and he's using anyways, it's just pretty nuts. It's wild stuff.
Yeah. Yeah, Rave, I will for sure. So this is how you do that multi-screen, Wayne. So it's I think you have to have a paid subscription. I don't know. I feel like their subscriptions have changed a few times over the past couple of years. But anyway, if it'll let you do it, I think the subscription I'm on for some reason only goes to 4, but you can have up to 12 or so. I just find that 4 is kind of a good mix. and I'll do that by sector, right? So I have like, my different watch lists over here. And then I'll have kind of like my dashboard for if I like my main markets that I want to pay attention to. And then I'll have like my single chart here where I can just pull that up for different markets. But anyway, okay, so let's keep moving. So that's Bitcoin. Hopefully you guys are clear on that.
Look at Ravencoin.
Sorry?
We could look at Ravencoin.
Oh yeah. So basically, let me just show you guys. So if we look at Coin Market Cap, what I like to do, I'm not using this like I used to a couple years ago when we were like looking for trades every single day. Right now, kind of the way I'm doing it is looking at the 7-day. So you get kind of a bigger pit. I mean, you can go down to a 24-hour and still get a similar kind of view. But like I'm looking a little more long-term now. I'm looking for stuff that gets up on volume and can stay up because there's been a lot of like pop and flops, right? So like if you look at the 7-day and then say you sort by volume, I don't give a shit about Huobi's token. Raven token, you can see apparently, and again, I used to trust this a lot more than I do now, apparently has traded, call it 50 million over the past 24 hours. ZB, Einsteinium, blah, 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 go on down, right? Out of these, the only one that I saw that after looking into it that I was even remotely interested in was Ravencoin. You can see the top market is Binance. So I trust, and I use that term very loosely, but I'm using quotey fingers. I trust Binance's volume more than I would trust like an Upbit or, one of those other sketchier exchanges. So, I mean, the fact that it's trading real volume.
Utrex 2's got close to 7 mil there. And
yeah, good point. So
pretty reliable.
Yeah. And Binance against their BNB is another million, right? So however you look at it, I would say like, okay, this is trading real volume, right?
Yeah.
And then, so if we jump over and we take a look at, let's start by looking at the number one market, right? So that would be Raven Bitcoin on Binance. So that's kind of how I like to start. So RVN BTC on Binance. So you can see, oh, okay, this is pretty interesting. It's got some real volume coming in. Basically, what happened here? Well, it had its first pump, and then it did the slow kiss of death back down to accumulation levels, and then it went nuts, right? I didn't buy this. I didn't accumulate it. I haven't been paying attention to it. And at this point, in my opinion, it's up way too much to just go, yeah, I want to buy this. If you look at kind of an intraday chart, if you are paying attention to something like this and you see signs of an early trend, then a way that you could play it is a 1, 2, 3, 4 pattern, right? Where you get the initial push, you get the pullback, and then you get the retest and the breakout. So that's kind of playing out at this point. So in my opinion, like I'm not going to chase this because it's already up, what, 200 or 300%. But it is interesting. It's in play. I would keep this on my watch list and try to determine, is this going to be a pop and flop or is it going to have some continuation? And then if you look at the USD chart kind of calculated by TradingView, you can see again kind of what happened here is, early kind of accumulation range, had a pop and flop, and then just kind of sold off. And then here's kind of the next random pop, right? So here we are at prior resistance. So what I would be looking at on the daily is like, okay, is this going to turn out to be a much bigger pattern, right? Like say we get a week's worth of pullback and then a retest here for a much larger move, maybe to a new all-time high, right? That's what I would be looking at. Again, I don't like to just buy after it's up 200 or 300%. I want to see a weak pullback with falling volume and a retest on real volume for confirmation that it could go a lot more.
Yeah, and I saw volume increase there too since it started rallying.
Yeah. And I don't know. Oh, I guess. Oh, yeah. So Bittrex. So
So,
that's it. I wonder if more people are trading this on Bittrex on a, I guess, volume percentage basis. Let's see. Yeah, look at that. So there's a lot more of an increase, even though the volume is lower on Bittrex, the volume increase is much bigger. So it looks like there's more people starting to trade it over there.
yeah, and on a fundamental note, that's a good question. So someone's asking, why is RVN pumping? On a fundamental note, so I was thinking about that today. It's it's a fair launched coin, so there's no ICO, no pre-mine, anything like that. It's a proof of work coin. It's a proof of work coin that's ASIC resistant, and it's similar to Bitcoin, except they've increased the supply, right? So instead of 21 million, it's 21 billion. Instead of 50 coins per block, I think it's 5,000, and instead of 10-minute blocks, 1-minute block. But they've made it ASIC resistant by combining multiple different algorithms together. And the developer said that if anybody generates or creates an ASIC, they're going to change the mining algo. So I suspect what's happening with Raven right now is I wouldn't be surprised if it was actually just a hot GPU coin to mine. I think a lot of miners need something to park some hashing power in this bear trend, and wouldn't surprise me if that's the reason for this is that it's just a new hot toy for miners to mine a GPU, and we know that a lot of the major mining cartels, people who run it on an industrial level, certainly have the capital to move a market, and it's also in their best interest for higher prices because it makes the mining more profitable, so on and so forth, right? So oftentimes, like, mining cartels will also be traders too. There's a symbiosis between their mining and their trading happening. So it's kind of like an open business. So that's my hypothesis why I think that I think it's kind of like the darling for GPU miners right now. But that's speculation, right? I'm not mining it. So
yeah.
I don't know.
And I don't see any other fundamental stuff. If you guys have heard anything, let us know. But it's kind of funny to me that they posted this was just last night, like basically a CYA, like, hey, if it goes up, don't just FOMO buy, which is smart. And I think it's responsible of them. So they're probably looking at this going like, oh, we either don't know why, or okay, we know that, like Rocky, like you said, like it's some mining cartel or something. And so what's going to happen is there's inevitably going to be some idiots that chase the high and then put themselves at risk of losing a massive percentage, which is again why I don't like to just chase random pops like that.
Yeah, the candles, notice how the candles start to get bigger and bigger. Usually when I see candles getting larger like that, it's usually indicative of at least getting close to a major sell-off, especially when you see them getting larger at a resistance point. That doesn't necessarily mean it can't break the all-time high and go up higher, but expect it to hit some resistance here. Like if it were to break an all-time high, I think it's got to have a major dip and correction at that resistance first, can bounce, consolidate, and then break it, right?
Yeah. So if it did like a measured move, like out into the future, right? So say it did the pullback, it did that, and then it gave us something to run an extension off of. But then, you have a 1-to-1 move like that. That could definitely happen. But again, like you want to wait for that retest so you can get set risk to reward.
Yeah, absolutely.
Yeah.
So and that Binance coin's obviously doing well because even Binance is doing well. I mean, it's not like the coin gives you equity or anything like that, but they do have buybacks. They have the capital to market make their own markets easily. They're still profitable in the bear trend because people are still they're still one of the most profitable crypto exchanges around right now. So it's just in their best interest. In my opinion, it's just in their best interest for their coin to do well, right?
Yeah.
Over a long haul. And so, it doesn't, we know that Binance markets on Binance tend to pump when they get listed and so on and so forth, or that ICO that they had recently, it had a big pump. That seems to be typical behavior at Binance. It could even be their own market makers or market movers, so on and so forth. That's all speculation as to what the cause is, but we do know that they have a habit and a pattern of markets moving higher on Binance versus other markets. So I wouldn't be surprised if they were playing in their own markets and to have their own coin. I mean, everyone loves Binance because of that reason, right? That, you know, Binance became a big exchange predominantly because listed coins had major rallies. Even if it was short-lived and only lasted a few days or a few weeks, that's like the best advertising they could do for for crypto traders or investors or whatever. So not everyone drools over Binance listings, right? Now, as to this is all speculation. I think they're playing their own markets personally. I think that the habit and the pattern is way too common for them not to be, but that's speculation. And then obviously, you know, there may be legal risks with something like that in future if they ever get caught with their hand in the cookie jar. But
Yeah.
we'll see. I don't want to just speculate or throw shade on the exchange or whatnot, but I would be more surprised if they weren't manipulating their markets than to find out that they were. Let's just say that.
Mm-hmm. Yeah, the BTC chart is much easier to see what's happening on. Like if you look at the USD, it's very strange. It's very hard for me to make sense of this box right here. But you can see that this is absolutely trading with conviction against Bitcoin. So early trend, accumulation, breakout, like beautiful, beautiful price structure. And then here a couple of weeks ago, retest of the all-time high. And then now looks like it's going parabolic. So with the USD chart being kind of mid-range, like I do see a lot of risk, right? So parabolic on the BTC, mid-range USD. Ooh, you know, like they say in trading, guys, like you don't strike out because you don't swing, right? Like you can take as many balls, you can watch as many pitches go by as you want, and you're not going to lose money by not swinging, right? It's when you swing and you have a strike that's when you lose. So for me, like on coins like this, where you know, some people will get FOMO or they'll be like, oh shit, I should have bought the all-time high. And, you know, and then you start driving yourself crazy with FOMO and regret and greed and all this stuff. Like for me, I just look at that as, oh, cool. That's an interesting pitch. And it went by and I didn't catch it. And you don't have to catch every pitch or hit every pitch to get rich. Hey, that's kind of a nice little quote. You don't have to hit every pitch to get rich. It only takes a couple of years.
That sounds tweetable, Chris.
Yeah, dude.
I wonder.
I'll let you tweet that one. I'm so over Twitter.
Yeah, you want me? I can usurp and claim it as my own. And
Sure.
be like, look how smart I am with this this nifty quote.
Yeah, or if one of you guys wants to steal it, I don't care. All right. Okay. So
before I move, what's the extension level? Because we've hit resistance on the US dollar. What's the extension on the BTC if it's hitting a resistance?
Yeah, that's a good question. Let's run it from the start of the bigger trend right there. So running it from that low to this high minus the retracement. So yeah, we're hovering up around that 100% right now. I wouldn't be surprised. So after, you know, about a solid week of strong gains, let's see, from that last one, it's up 60. I mean, it could just have some kind of runaway, especially if the order book thins out. It could hit the 160, but you know, this is definitely a 1-to-1. And also, I mean, let's just measure this range here. Yeah, it's pretty close to that right now. So I would say if I were long, I would be taking profit inside of this box. At least, like the way that I trade breakouts, I'd be taking, if it were me, at least a quarter off.
Yeah, it makes sense. That way, if it flops, you still get something out of it.
Yeah. All right. So
how about news? You want to flip into some news, or are there any other coin charts you think are worth
I
looking
think
at?
for the most part, those were the most interesting one. Talked about Litecoin, Raven was the only one popping this week. Binance, Bitcoin. Yeah, let's do some news. We've been going for an hour, so.
So apparently someone just posted that Fidelity start trading Bitcoin today.
Oh, let's take a look at that. Interesting. I'll contact my dude over there.
So that could be interesting. If I could buy some Bitcoin in my retirement account, that would be nice, or a tax-free savings account or something. That'd be nice.
Yep.
Shelter some of those gains from the tax man.
Yep. Awesome. Thanks for posting that, Jeremy. Josh says, oh yeah. So talking about Binance real quick. So the decentralized exchange, they were doing the test net. I think 2 weeks ago was when we were talking about that, either a week or two ago. So I know there's a lot of excitement around this. I played around with the platform. The UI looks pretty good. I haven't done a whole lot on it though. What else were we talking about, Rock? Let's see.
So there's the Fidelity. We were looking at Quadriga. There was there's Starbucks in the backed news. One sec, I've got some stuff on my.
Yeah, so basically this sounds, what I got from this is they're just, Starbucks, like a lot of retailers, are just looking to have like instant conversion from crypto to fiat. Yeah, it says it right here, convert into dollars, which can be used. So either way, that'll be good for exposure.
Actually, exciting news for me as a Tezos investor, for Tezos investors. So Coinbase actually hired a Tezos developer. And word on the street is they're actually testing proof of stake Tezos and will likely be listing it. I'd be very surprised if they didn't list Tezos. I mean, I don't think that's going to be good for like a quick pump. We've obviously seen what Coinbase pump listings are like, pops up 20% and then dumps. So, I'm not in it for those short, like little Mickey Mouse gains, but for as far as the next cycle, if it's on Coinbase, it's just another cheap coin for new users to on-ramp into and get easy access to from their bank accounts, right? So it's just another option for them to increase supply and user adoption. So that's pretty good. And then also Coinbase invested in Staked. Actually, a whole bunch of companies invested in Staked, including Pantera and I believe Digital Currency Group and stuff. And so that's like a staking service where they stake coins. And they actually posted an article last week saying that basically saying Tezos is superior to EOS and that it had more nodes and that there's more people. Actually, no, they saying more people were participating in Tezos than in EOS as far as the baking rewards or whatnot, staking rewards. So nice. It's just more kind of ground up industry growth that I'm seeing in Tezos. So that's good. I want slow growth. Like it just might sound strange, but I would actually be like, let's say Tezos were to hit $10 tomorrow, I would actually be disappointed. And that sounds insane that I would say that. But the reason why I would be disappointed is I'd be forced to sell some and then realize another massive tax event that I'd have to pay. I'm putting things in place to try to minimize that. So I'm hoping that we have another, quiet year for 2019, at least for my investments, so that I can get better prepared than I was on the last cycle, so that I minimize what I pay, because it's just a real pain in that sense. I won't go too much into that, but I'm looking at various different options.
Speaking of pain.
Yeah, speaking of paying, I got taxed on Quadriga. Basically, so Quadriga CX. So here's an interesting thing. So they found the cold storage wallets 6 of them, they were empty. But there's some analysis that's happening right now, blockchain analysis, that's actually leading to the possibility that Cotton may have stored a bunch of the Quadriga coins on various exchanges. That would actually be the best case scenario.
Yeah.
The reason why it would be a best case scenario is they don't need to find the private keys, and they don't even need to have the passwords. All they need is to contact his exchanges and subpoena them and say, send the funds, Quadriga funds, over to us, and the exchanges can handle that. So I'm keeping my fingers crossed that they find like over $100 million on various exchanges. That would be like the best case scenario for me. Someone's asking, could I explain the loss? The loss is basically I had some fiat on Quadriga. And so I kind of, in my mind, I've written it off. But if I can recoup that loss, I'll definitely be a happy camper.
Yep.
Yeah, you can write it off on your taxes for sure, but it's still a loss. Nonetheless, I'm still taking a hit even if I do that.
Wait, Rock, are you telling me the Canadian government isn't going to reimburse you for your losses? You know what we should do? You know what we should do? We should set up a GoFundMe for you.
Hey, there's a good idea.
Oh man, somebody posted that video of that guy that lost. He says he lost his whole net worth on Quadriga. Did you see that?
Yeah.
And then he he claims somebody else set up a GoFundMe. Listen, man, like at this point, like obviously I don't want to see anybody lose money, but like if you have your entire net worth, and then I started watching the video and the guy started talking about how he took out loans to buy Bitcoin and stuff like that. I'm like, if you do that and you lose all your money, don't go promoting a GoFundMe account. Like, are you kidding me? You were stupid and you lost all your money, and now, like, come on.
Chris, I put all my money on BitMEX, and I tried to 100x leverage short it, and I lost. I'm launching a GoFundMe.
Yeah. Yeah. No, that just, yeah. You know what grinds my gears?
Yeah, this isn't crypto socialism, where you can do stupid things and then get compensated for the stupidity,
Yeah. Thanks, Florian. See, we got some nice people. Yeah. So, okay. Got the Quadriga thing. You know who actually had an interesting, I don't know if you guys are into conspiracy theories or whatever, but Jesse Powell from Kraken he has a podcast, and they did a couple of episodes kind of talking about it. And I don't know, there was some interest. They had some interesting thoughts of what happened and what the possibilities are. But anyway, let's see what else we got. So we talked about that. It's actually, man, it's been a couple of slow weeks, but there are a lot of things just kind of developing in the background. Another thing is eToro added. eToro's a big retail broker, so this is just more exposure.
Yeah. Also, you posted something on the city of Denver piloting a blockchain voting app.
This one. Yep. So, yeah, so we're going to start to see a lot more of this. I think like this year, we're going to see more stuff about property records going on the blockchain and medical stuff and, voting. And the more headlines like this we can get, the better. Absolutely.
Absolutely. And the interesting thing is, if we could, there was, which country was it years ago? I wonder if they're still doing it. It was an Eastern European country. I think it was Georgia.
Was it Estonia?
I think I remember it being Georgia, where they were actually recording land deeds on the Bitcoin blockchain. I think it was like 2016 or 2015. I wonder if they're still doing that. But what would be interesting is if more stuff were put on the Bitcoin blockchain or any public decentralized blockchain like that. Just the level of importance and value that would have to society would almost make it a backbone to the economy, right? Eventually, if you start recording stuff like that, it becomes so monumental that having it go away or dying would not be, it wouldn't necessarily be an option that regulators would want to see, right?
Yeah.
The more importance we could add to those public blockchains. And I think there's going to be a use case for something like Bitcoin's blockchain in the future around that, because you could do private blockchains, but you could just use a database too, right? There's nothing guaranteeing the immutability of a private blockchain. So how are they going to, what's the point of them putting land deeds or voting on a blockchain if it's not immutable and available to the public, right?
Yeah.
It's the purpose. You could just store it in your servers like they're doing now, right? What's the point? Servers are fast and efficient and cheaper.
Yep. Question: if properties are going to be on the blockchain, will there need to be will there be a need for real estate agents? I think so, because I mean, real estate agents do much more than just title work. So if anything, I think the main way, and I actually I have a lot of experience in real estate. So I was in the mortgage industry for 7 years, and I've done thousands and thousands of transactions. And the one piece that I think blockchain will have the biggest effect on is the title. Basically, like, it'll impact title companies, right? Like title insurance, where they basically have to look up, and see if there's any liens filed or who the owner of record is. And right now it's so outdated. The system that we have here in the US is absolutely insane. Like I bought this one house a few years ago, and the property history, just to give you an idea, like how bad this can get, it was this guy we were buying the house from. We were going to fix it up and build something new on it. He said he was the only owner. Well, when we went to pull the records, turns out he had a bunch of brothers and sisters that were technically like, they had ownership in the property, but we couldn't track them down. Like one we found, he was in prison. This lady was homeless and a drug addict on the streets, literally. And there was somebody else. I think another one died, but there was like 5 siblings, right? And we had to track all these people down. We had to have them sign documents. It took us 6 months. The deal was that good, though. It took us like 6 months. My attorney was happy because she got so many hours of work. But that's just how bad this is. Where like if you simplify that and put it on a blockchain, I think it's going to really make a lot of those things more efficient, and it'll drop the cost of title insurance, and it'll just make real estate transactions faster and easier and more efficient, where I think there's still going to be a need for real estate agents, because what they do is they're kind of like a coordinator, right? Like anybody can go online and like look up real estate and kind of figure out what's available in a certain area. But for first-time home buyers that don't know how to figure out what they qualify for, or like what type of mortgage broker they need to talk to, or just like, getting access to homes or being taught the process, right? Like I think real estate agents do a lot more than people realize. And so that's why it's been so hard to disrupt that space. And there's a lot of people that are trying to make the real estate agent irrelevant, which I think is just a very difficult thing to do. And blockchain technology alone, I don't think is going to be the thing that does it. Oh, Wayne, you're doing the same thing. Huh. Nice. Yeah. I mean, I've done deals all over the US, like literally all 50 states. And I was actually the director of specialty lending, which means I was the link between like some of the biggest home builders and Wall Street. So I was helping before the subprime thing got out of control. Like I had a front seat to all that mess. And I got out whenever I saw the writing on the wall. I was like, this is going to end so bad. And sure enough, like I left the mortgage industry in 2007, and that's when things were really just starting to hit the fever pitch. Anyway, Yeah, exactly. Bevo time. Medical insurance info would benefit being on blockchain. Yeah, that's another thing. Medical records, medical, tracking stuff like that. So cool. What else, guys? Anything else? Any other? Oh, one more thing that I wanted to talk about. You guys, I tweeted this out just because I needed to say, like, hey, be careful. I haven't done a deep dive on this, but whenever I start to see stuff like this, I just get real skeptical. Um, any company in the crypto space that's like talking about earning interest on accounts, like you have to be careful. Like this, I don't believe is FDIC insured or anything like that. Like it's just a highly speculative thing. And, 6% doesn't sound that high, but if you're looking at a lot of money, I want to know how they're going to be able to pay this. And is it sustainable, or is it just another Ponzi scheme like BitConnect with a
Yeah.
more professional looking website?
Especially since like high interest savings, I think maxes out right now at like 2.5% or something like that. And that's
Yeah.
for the rest of the world. Now, the thing is like 6.2% for some, I don't even know what BlockFi is, who they are,
Yeah.
like anyways, so I'm not entirely sure about them. It looks new. But if someone actually just wanted to make 6% a year off of their crypto or fiat with the same level of counterparty risk, or maybe even less counterparty risk, going with more established companies,
Yeah.
you could lend on Poloniex or on Bitfinex, right? You can make like 20% a year lending on Bitfinex, depending on the market rates, just by margin lending,
Yeah.
right? And you know that it's legit. You know exactly where the money's going to. It's not like you're giving it to Bitfinex and then they're speculating or whatever to try to give you the percentage. It's going directly to traders for margin lending, and traders, there's an open market with that, and you set your interest rate. And so it's kind of
Yeah.
a free market with that. So in my opinion, that's been going on for years. It's a lot more legit. If I want to just like park my money on some exchange and try to earn interest, regardless of the counterparty risk, I would go with something like that versus some new weird product or service. That's just my opinion on that.
Yeah, and I know Pomp's been pushing this. I think his fund invested in it. And so I think this is at some level legitimate. Like I don't think it's, again, this is just my initial opinion or my initial like perspective. I haven't done the research on this company yet, but my initial thought is like, okay, they're at least legitimate. It's not like a blatant scam like BitConnect. However, what are the risks? How could this crumble? Because anytime you start offering interest on a like a quote unquote like savings account or something that's twice what you can get at a bank, I just want to know what they're doing and what the downsides are, right? That's why I haven't done much in like the peer-to-peer lending space. Like if you guys look at a lot of these peer-to-peer websites, they seem really good. And there's a lot of bloggers and YouTubers talking about how good they are and how they're getting like 10 to 12% interest. But I know lending intimately. That's my background. Like I skipped college to go into the mortgage and the finance space initially, right? So like I understand how this stuff works, and a lot of times like you can get really good results in the short term, but defaults happen after a few years. So my only non-financial advice to you guys is just before you go throwing money into something like this, make sure you understand it inside and out, and don't just like be lazy and say, oh yeah, 6%, I think that's going to be guaranteed and risk free. No, there's probably some risk there. So
Yeah, absolutely. And just to your point, as far as counterparty risk, a company can actually seem and be legit until it's not. As an example, I've been using Quadriga CX reliably since 2015. I've
yeah.
been using them to pay my bills. I've paid credit cards off with them. I've withdrew money consistently with them over the years. So because of that habit, I developed some trust with them. And because they're Canadian and such, And even though they're going through withdrawal delays at the time, oh, well, the Canadian banks are just giving them a hard time. They're in a legitimate lawsuit, all this crap. And then it turns, and so then I end up taking a hit because I trusted them too much, kept money on the exchange. Now it comes out that one of the founders and investors is actually a criminal who was running an identity fraud scheme in the States and also linked to money laundering, blah, blah, blah. And I'm like, this is all crap that I had, you use a service for years, you have no idea. And this is one of my biggest pet peeves with all this KYC stuff, right? Yep. You look at an exchange, all these crypto exchanges, or any exchange or service, looks legit, blah, blah, blah. Go ahead, send us your passport and send us a screenshot holding up the passport and all your private information. But, we don't, and they all require this, and because the law requires this, but we don't know who these people are running it. And, I was mortified to find out that an exchange I'd been using for years, one of the investors and partners was running an identity fraud scheme, and it was a criminal. Like, imagine, sending someone like that your KYC documents. I mean, that's, anyway. So just to kind of reiterate that point about, trusting these just random new startups and stuff like that. Like, you have to be very cautious. And then another question I would have with that lending is the 6% pegged to fiat, or is it pegged to crypto? Because if you're going to put in Ethereum and they're just going to give you 6% in crypto or whatever, then guess what? You can do that staking something. You can put in, you could buy Tezos, put it on a hardware wallet and get 8% or 8% a year in a hardware wallet with no counterparty risk. If it's just going to get paid in crypto versus fiat, right? If it's getting paid in fiat, pegged to fiat, then that's a different story. That's a different service. So little details like that is what I would look into in relation to anything like that. And anything like that, like, I would let them do their business for a while before looking at that. But I think there's way more legitimate, less risky investments out there in the legacy markets that can get you 6% returns without that same level of counterparty risk. Just my opinion on first glance. I haven't looked into that new platform at all. So that's just my initial thoughts are off the top of my head.
Yeah. So I'll do some deep dives on it, and maybe we'll do a little class or like a case study, and I'll give you guys my thoughts. But I think it's good that we're seeing this type of development. It's just, I'm a little skeptical whenever I see them advertising like that, when it's literally twice the amount or almost 3 times the amount of what you can get at a regular bank. I want to know, how are they doing it and what are the risks? Like, almost do like a pre-mortem, right? Like, how could this die? How could this turn into a really terrible scenario? And if you can't find any answers, then hey, maybe it is like a really good thing. Or even if you do understand, like, oh, okay, these are the scenarios where this whole thing could fail. And then you try to mitigate those, right? Or at least manage the risk around it, or at least accept that those are what the risks are. But I mean, I think that's what happened with BitConnect, is so many people just got starry-eyed and didn't think about risk, and they just believed the hype. Oh yeah, I'm going to earn 1% a day. Like, yeah, okay, do that with $1 million and you're the richest person on the planet in a very short period of time. It just doesn't work, right?
Yeah, absolutely.
Yeah.
Now this is probably because of the backing they got and because it's in New York and stuff, it's probably a little bit more legit than a lot of these like fly-by-night crypto Ponzi's that we see. Like, a lot of this cloud mining stuff will promise really high returns, and like almost all of them are scams. I would say pretty much all of them were scams. So this might be a little bit legit, but it certainly requires a lot more fundamental analysis as to how it is that they produce those level of returns, right?
Yeah. And here's the other thing I'll say. Just because a company raised VC money doesn't mean they're legit. In fact, there is a lot of dumb money out there right now chasing deals. So like, it's still relatively easy for companies to raise 10, 20, 50, even $100 million and operate at a loss. So like, what they could do is like, say they raised what I forget what it said. I think it was 55 million or something. Say they raised 55 million, and well, that gives them a lot of runway to operate those accounts at a loss. So say they're arbitraging that negatively, right? Where they're paying out 6%, and after their operating cost and whatever, say they're losing a couple of points every month on those payouts. And they go, well, we know we can make this last for 3 or 4 years, right? So like they could have runway and then just like burn up all of the VC's money. And then a few years from now, they go, hey guys, sorry, guess what? We can't pay these out anymore. Like that's usually how these things end up. So it might not fail in the short term and it might look really good and might attract a lot of people, but I want to know what the bad scenario looks like.
Yeah, but Chris, they had this nifty stock photo image on their website of some guy wearing glasses, which is a symbol of intelligence, looking off into the distance. Doesn't that evoke confidence in you as an investor?
Oh man, they created a video with particles and waves and talked about quantum physics in the future. British accent. Okay, guys, let's go ahead and we'll wrap up the recording. Hopefully this class was helpful. Talked about Bitcoin, Litecoin, potential breakout. What else? Talked about Raven, talked about total market cap and altcoins, talked about some news, a little bit of tangents in the equity markets, managed futures, that kind of stuff.
All right, folks. Yeah, I'll just send the recording there, and hope everyone has a great weekend. Cheers.